The Vanguard S&P 500 ETF, ticker VOO, is designed to provide comprehensive exposure to U.S. large-cap equities by tracking one of the most widely followed equity benchmarks in the world, the S&P 500 Index. For many investors, VOO serves as a core portfolio holding because it offers broad participation in the U.S. stock market through a single, low-cost ETF. VOO is passively managed, but that does not mean the index it tracks is purely mechanical. The S&P 500 is constructed and maintained by an S&P Index Committee, which selects companies based on a defined set of criteria, including market capitalization, liquidity, financial viability, and sector representation. This committee-driven approach is important because it means inclusion in the index is not automatic. Companies must meet qualitative and quantitative standards before they are added. The fund defines large-cap stocks the same way the S&P Committee does, which can sometimes differ from common market definitions. As a result, the S&P 500, and by extension VOO, includes a meaningful allocation to companies that some investors might classify as mid-cap. This overlap occurs because companies are added or removed based on index rules and committee judgment, rather than rigid market cap cutoffs, allowing the index to evolve gradually as companies grow or shrink. VOO holds its stocks using market capitalization weighting, meaning larger companies have a greater influence on the fund's performance. As a company's market value rises or falls, its weight in the ETF adjusts automatically. This structure allows VOO to remain aligned with the market's leadership without requiring active stock selection or frequent trading. Sector exposure within VOO is not left entirely to chance. The S&P 500 considers sector balance by comparing the weight of each GX's sector in the index to its weight within the relevant market capitalization range of the broader S&P Total Market Index, which serves as the parent index. This process helps ensure that the S&P 500 remains representative of the U.S. large-cap equity market, rather than becoming overly concentrated in a single sector simply due to short-term market movements. The index is rebalanced on a quarterly basis, allowing changes in company size, sector composition, and eligibility to be reflected over time. This regular rebalancing helps maintain consistency in exposure while still allowing the index to adapt as the U.S. equity market evolves. Because VOO tracks the index closely, these adjustments are implemented systematically and transparently. One of VOO's defining strengths is its diversification. By holding hundreds of large-cap U.S. companies across all major sectors, the fund reduces company-specific risk and avoids reliance on the performance of any single stock. This makes it a common choice for investors seeking long-term growth without the complexity of managing individual positions. Cost efficiency is another key feature. Vanguard is known for emphasizing low expenses, and VOO reflects that philosophy. A low expense ratio means less drag on returns over time, which can have a significant impact when compounded over long investment horizons. VOO is typically used as a core allocation within a broader portfolio. Investors often pair it with international equities, bonds, or other asset classes to create a diversified strategy. Because it represents the U.S. large-cap segment, it is frequently viewed as the equity foundation around which other exposures are added. It's important to understand that VOO is fully exposed to equity market risk. During market downturns, the fund will decline alongside the broader U.S. stock market. However, over long periods, the S&P 500 has historically reflected the growth of corporate earnings, innovation, and economic expansion, which is why many investors are willing to accept short-term volatility in exchange for long-term growth potential. In summary, VOO offers disciplined, rules-based exposure to U.S. large-cap stocks through a committee-managed index that balances market capitalization, sector representation, and investability. Its structure, low cost, and broad diversification make it a cornerstone ETF for investors who want to own the U.S. equity market without trying to outguess it.